Technical analysis. This type of analysis is based purely on the belief that all available information in the world is already accounted for in the price. And therefore all you need to do is analyze the charts. Because if all the information is already contained in the charts, then there's no need to analyze news, interest rates of countries, or even events like wars or very good harvests in different countries that affect these currencies, because you are assuming that all of that information is already reflected in the price at any given point in time. Traders who use technical analysis believe that prices move in trends and historical patterns tend to repeat themselves. And that is what a technical trader would take advantage of. Seeing a certain situation that he's seen before and knowing how it resolved in the past, he can make a certain assumption of how it will resolve today and based on that make predictions and enter the market. In a way, technical trading is more precise and definitive than fundamental trading. Because in fundamental trading, you have to use your own expertise, knowledge, and assessment of the situation. You are expressing a subjective view on what will happen. Whereas in technical trading, you are looking at patterns which happened in the past and based on that information deriving certain rules for your trading systems to act in the present day. Therefore, you're being objective. That's a very big advantage of technical analysis. It removes psychology from trading. So you're not worried about whether you made the right call or not, because you have taken yourself out of the equation. Once you've set up these rules, all you have to do is follow them strictly and precisely. If you've set them up correctly, you should make a profit with a very high chance of success. Therefore, you're not worried and staying up late at night or not being able to sleep. Another good advantage of technical trading is that in contrast to fundamental analysis, you don't have to develop an intimacy with the currency pair you're trading. Because charts, of course, different currency pairs will have different styles of charts, different types of movements, but so long that you've learned how to analyze 1, 2, 3, 4 different currency pairs, you will start seeing consistent themes across different currency pairs. And you will be able to easily switch between analyzing different currency pairs because you're not that invested into the knowledge base of a certain currency pair. You don't have to look up economic events about it. You don't have to know who the key spokespeople are for that country and interest rates and so on. It's very easy to switch between charts and takes the minimal amount of time to adjust yourself to a new currency pair, and therefore you have the luxury of trading a much more diverse portfolio of currencies when you're using technical analysis.